Today's guest is a multifamily real estate veteran with over 30 years of experience. We're going to talk about his long career and about his passion for teaching others in the real estate business. Next on the WTRE show, my guest, Mike Morawski.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello and welcome back to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today we have Mike Morawski. Mike is a real estate trainer, public speaker, author, as well as the founder of My Core Intentions, a coaching business dedicated to all things multifamily. Mike, thank you so much for joining us on the show, and how you doing, my friend?
I am doing great, Dwaine. Thanks so much for having me on. I appreciate it.
I'm really looking forward to it. Very long time coming. I really appreciate having the opportunity to speak with you. Like I mentioned into the my intro, that you have over 30 years of experience. I know you deal with a lot of different deals and a lot of different things in your past. Can you kind of talk about how you got started in real estate and what your current focus is on right now?
Yeah, you bet. So I got in real estate. I was in the general contracting business and had built a pretty successful company. Woke up one morning and looked at my wife at the time and I said, I can't do this anymore. I was just burned out. I was still banging nails and, managing and doing everything else that goes with owning a business and being an entrepreneur, right? So I sold that company and took a year off to really kind of figure out what I wanted to do with my life. And I had done a couple of flips. So my wife and I, we bought a couple of properties, we rehabbed them and resold them. And this was long before like house hacking or flipping was really in fashion or sexy, right? It was kind of unheard of back then, or not as popular anyhow. But I met a real estate agent who was really successful. And I had gone to him and said, hey, I think I want to get in the real estate business. And he really encouraged me. He said, Mike, I think you'd be great at it. I think that you have some great skills that you could transfer into that business and do really well. I said, great. I said, could I follow you or shadow you? And he said, no, here's what I'll do. I'll make you a cassette tape and you can listen to that. And that'll give you all the tips and techniques. Now I say cassette tape and there might be some listeners that don't even know what that is, right, Dwaine? But it's like a podcast today. And I've listened to that over and over again. And I went in the business and sold residential real estate. I sold 78 homes my first 8 months in the business and went on to build a team selling 125 homes a year. 2005, I saw the market really starting to contract and get soft and knew that I wasn't going to be able to keep that same production up. So I decided to go in the apartment business, something I'd always wanted to do. I understood the private equity model and understood how you could raise money from individuals, marry it with a great real estate deal. And Dwaine, provided everything went well, everybody made money. So I went and over the next 30 months, I raised $18 million, bought $60 million worth of real estate. And it was 4,000 apartments in 5 different states, built a property management company managing about 7,500 units. And today I've taken all that knowledge and put it on a platform and I'm in the coaching and training space today. So I like to give back.
Absolutely. And as far as kind of like your knowledge now, I know like there's a lot of changes now going on with the market, especially as we're coming out of recession and through the pandemic. Looking now with your experience in the past, what can you see? Can you tell us kind of your insight as far as markets that you liked that may be still relevant today, that are good investable markets for people to kind of get started with?
Yeah, it's interesting. One thing I teach my coaching clients is that every year, and then again at mid-year, it's updated, but there's a list that's put out by the national brokers and some of the research platforms, so like Marcus Millichap and CBRE, then you got Reese and Real Analytics. Those companies, they put these data out that says, hey, this is the number one market. And if you look at that data for the last 15 years, Dallas is one of the top markets in the top 10 always. You've got Dallas and Atlanta and Phoenix. Those are hot markets, and we kind of call that's where the smart money's at, right? So
Hmm.
that's where everybody's buying. But I think you look at other off markets, right? So if you go to a Kansas City or a Wichita or other markets like that that might not have that big attraction there, but they're solid markets. And you want to look at the things like the job growth and the household income and population growth, those types of things that are really the drivers to drive the multifamily business.
Mm. And you had mentioned kind of some of those markets that are not kind of like the real sexy one, like Wichita and all of those ones. Are you teaching your students, and what you did in the past was kind of focus on kind of cash flowing markets? I know there's other really hyper markets that a lot of investors invest for appreciation. What is kind of the ones, kind of the techniques that you're talking to your students about?
Yeah, so I teach two real strong fundamentals. One is to create short-term cash flow and long-term wealth, and the other is exit planning. I think that you have to know what your exit plan is, but the short-term cash flow and the long-term wealth, wealth happens as kind of organically. There's the forced appreciation and there's the things you can do to drive that property, but cash flow you need to have when you walk in the door. So you should be looking and have in your mind as part of your buying strategy that when I do a deal, that deal needs to have X, whatever that X is, could be 7, 8, 12% cash on cash. So one thing we used to do is tell our investors, hey, we'll pay you a 12% cash on cash return on your money, but we're going to pay you 7% current, and we'll book the rest till the back when we sell out the deal. And then you'll get X percentage when that happens at that time. So that might have been a 70-30 split. So over and above the cash flow and everything else, after they got their pref payment, then we would go to that 70-30 split.
Mm.
The second thing that's really important, Dwaine, is the exit planning. I don't believe anybody should buy a deal unless you know how you're getting out. I've spent hundreds of thousands of dollars over the years coaching, training, books and tapes to kind of leave a lot of these events with great teachers and trainers feeling empty, like I was missing something. Because we're always taught how to get in and how to operate a deal, but nobody ever teaches us how to get out. And that's the philosophy that I want to come from is I want to teach people how to get out. So exit planning is really that philosophy.
Awesome. Yeah. So now we kind of talked about kind of the baseline as far as kind of the markets and kind of some of the strategies there. I want to kind of go into like the other part of kind of some, because I know you talk a whole bunch of different parts of the multifamily business, but the fundraising. So, talking to investors and things like that. I know without getting in too deep into the weeds, can you give us a little bit of tips for some syndicators that are, looking at approaching doing their first deal to, raise money from investors?
Yeah. So I think that one of the big things in raising money is asking for referrals. Now, when I first started raising money, I knew absolutely nobody. And I had a database of maybe 250 people. But I put an ad in the newspaper. Again, I'm going to date myself, right? So I put this little classified ad in the newspaper. It cost me $45, but I raised $500,000 from it. All the ad said was real estate investors wanted. My phone rang off the hook for a week. And I talked to people. I said, hey, look, I'm doing this deal. It's 11 units. It's 600,000. We're going to do this in CapEx, and we're going to re-engineer the property. We can raise the rents this. And people said, hey, I'm in, and a lot of the soft commitments I got turned to hard commitments. We did that first deal and just took off from there. But the thing that I always remembered, and I knew this from selling real estate, was ask for referrals. So Dwaine, who do you know who's interested in doing some passive real estate investing? And you'd be surprised. I did a seminar in my office twice a week on Tuesday and Thursday night for 2 years. I put 20 brand new faces in that conference room twice a week. And every time somebody left, whether they were going to become an investor or not, I asked them for a referral and I got a couple of names. Call Aunt Susie, call Uncle Tilly, because they always knew somebody else who wanted to invest. So this is an interesting space, passive real estate investing, because people like real estate investing. It's sexy, but people don't want to do it themselves.
Mm-hmm.
And I discovered that really early on. And so that's how we started to raise money.
Yeah, definitely a lot of people always that don't have the time, don't have the knowledge or the access to deals or your expertise to go do these deals, and they'll definitely love to partner with you in the capacity as a passive investor. And
Right.
a lot of things you said, what you start off that was very effective for you, you can kind of easily translate that to today's world from doing a 2 times a week seminar. You can do that in a Zoom meeting like we're doing here. You can put an ad in Facebook or online, or write an article or something to kind of attract the investor, and then talk to them about investing and getting them to know you and be able to kind of take that to the next step. So it's really awesome that those steps never gets old. It's just kind of some of the
Right.
techniques, a little update. So that's
Yeah.
absolutely
Yeah.
can
Well,
you kind of go ahead.
that's an interesting point you make, is those techniques never get old.
Yeah.
It's like one of the things I teach people is how to source and locate off-market deals. And those are the same techniques that I used when I was a broker looking for listings to sell as a real estate agent, right? So it's the same techniques, and they don't ever get old. It's those same old strategies. I always say, talk about mastering the repetitious boredom, just the
Mm-hmm.
fundamental things that most people hate to do. But if you
Yeah.
master them and do them, you can be really successful.
Absolutely. And then one thing that you're known for as well that we had talked right before we started recording was, creating your own property management company. A lot of the syndicators and operators that we talk to, they utilize third-party property management companies, but you have able to kind of create one. Can you kind of talk about, some of the steps to creating one, as some people may be interested as they kind of start their real estate career as well?
Yeah, I think one of the first steps is get educated on it. Understand what everything is that needs to be done. I have a list on my website that is 55 tasks that get done in when you're managing a property. And I don't think they all get done in one day, but over time, there's different things, everything from being able to inspect a unit, market to a tenant, leasing, the type of lease to put together, to the finances, to the move out inspection, and everything that goes in between. I think you need to understand your market. You need to understand the product class that you're in,
Mm-hmm.
and you need to have good people in place. One thing I was always really good at, and I'm still really good at, is delegating and finding good talent to put in place to do certain jobs. So I had my biggest footprint in the Dallas Fort Worth market. And in that market, I was able to find a property manager who worked on one of the properties that we bought, who wound up being my general manager in that market. Because she was so good at what she did, we said, hey, look, we want you to really step up and to help us. So, a lot of people say, hey, when I take over a property, should I go in and fire everybody? I said, no. They know where the dead bodies are buried. Don't fire them. Let's resurrect what's there and then make decisions. So
Yeah, that makes perfect sense there. And you had mentioned earlier that you had wrote a book, which kind of sums everything up that we were just speaking about, regarding the exit strategy, knowing what to do. But I'm pretty sure it also has some other nuggets. Could you talk about what's in the book and what people can learn from it?
yeah, absolutely. So I did write a book called Exit Plan. And it's your complete guide to multifamily investing and why you need an exit plan before you buy. And it talks to the strategy that I've talked about, Dwaine, that everybody teaches us how to get in a deal. Nobody teaches us how to get out. I want people to focus on the exit, because there's a saying in real estate that says, hey, we make money when we buy the deal. And that's true. We do. It depends on how we structure it, how we buy it, what the terms are. But you don't realize that gain till you get out. Now, exiting doesn't always necessarily mean liquidating. It doesn't mean giving up control. There's other ways to exit and different strategies that you can come to the table with to help exit your property to capitalize on profitability. Whenever I would do an evaluation, I'd run a spread for 10 years. And I think that most syndicators probably will look at a deal for over a 10-year period. There's invariably a sweet spot somewhere between 6 and 8 years. That's your highest profitability point. Why do you wait for 7 or 10 years then and miss that window? Why not do something at that sweet spot? Capitalize, grab the return off the table, pull it out tax free, and go and run that spread again. And where can you be in another 3 years after that? So I think that people don't take that into consideration enough when they're walking into a deal. So
yeah, very good point. And I will make sure to get a little bit more information on how we get that book towards the end. I just had a couple questions here. So kind of get to know you a little bit more. Can you take us through a typical workday, and do you have any special morning routines?
Oh, sure. I am huge on daily disciplines, right? So I think that the daily disciplines are things that keep us focused. They keep us in check. They help build self-confidence, and they help you become better at who you are, right? And I mean, I think we all have special qualities that we need to tap into. But hey, I'm up every day at 4:30, 4 o'clock, 4:30. And I that's when I take my time. It's quiet, no distractions. I don't turn the computer on, and I get to spend time with the Lord, or I get to meditate, or I just take that time to really think about what I'm grateful for, journal some prayers, walk through that, and then I work out, and I get a good hard workout in before 6 o'clock, and I may go to the gym or whatever I'm doing that day, but it's, I really tax myself and tax my body, because I think we need to tap into that. We need to tap into that energy source, right? And that place where we might be a little bit uncomfortable, because you're going to go through your day and there might be some times that come up in your day that you're going to be uncomfortable. And by doing something to train your mind, train your body to be uncomfortable before that happens, then you're naturally going to embrace that uncomfortability somewhere else.
Yeah.
And then I hit it. I take care, nutrition, eat breakfast, and then I get after it. I get after my workday. And I typically, put a good, strong, solid workday in. I have, training and coaching clients. I do classes, and then I get opportunities like this, Dwaine, to spend some time with podcasters like yourself, and be able to get my story out and give my book away and things like that. So
absolutely. And then kind of talking about kind of getting into your day, work with clients and students and classes, things like that. Is there any tools or resources that you use to help you make your day go more, be more productive?
Well, I think tools and resources are just like what we're using now, right? Zoom. I remember I've been in coaching for years, and it always used to just be on the telephone, but now you can see your coach. Now you can be involved, right? And you can really see if somebody's engaged or not engaged. Are they distracted or not distracted, right? So, it kind of helps hold them a little bit more accountable. I'm an advocate for coaching. I've been coached for 20 years myself. I still have 2 coaches in my life today that keep me on track, keep me accountable, help my business grow. I can equate my business growing 20% a year after year, as a direct result of the accountability and with my coach. So, when you are paying for coaching and your coach gives you something to do and you have that skin in the game, you don't want to disappoint yourself, and you want to see if it's going to work. So you step out of your box, you step out of your comfort zone, and move your business forward. And not only do we move our business forward, but I think that it's, we move ourselves forward personally also. Because a lot of, hey, listen, we can make millions of dollars, but it's who we become along the way that really has a bigger impact on us and the people around us.
Very well said. And then finally, you had mentioned as well, when you're journaling, when you wake up early, you kind of have that quiet space, and you talk about gratitude. Can you just share with us what you're most grateful for?
Yeah, you know what? Every morning I'm most grateful for my feet hitting the ground, and being able to, enjoy another day. I'm grateful for my kids. I'm grateful for the opportunity to serve others and give back. Today it's about me giving back. Like I said, hey, I've made millions, I've lost millions, and today I have the opportunity to give back, and it's not about what I'm going to get, which is it's a big shift. And I think people get there over time, especially with going through some different business struggles. Look at the shift that's happened to us today as a result of the pandemic, as people in general. And I think that's what happens to us over time.
Absolutely. Yeah, very well said. And then finally, you had mentioned a book that you have available for our audience, as well as, how do we get in contact with you?
Sure. I appreciate that. So if anybody would like to read Exit Plan, feel free to go and download an e-copy for yourself. And what's funny is I just had somebody the other day shoot me a DM and say, this is a real book. So a lot of times I think people think, hey, he's giving away a white paper, a couple pages or something like that. This is a real book, 256 pages. So go to my website, which is mycoreintentions.com/exit plan, and you can do a free download. If you're like me and you want to read a book and highlight it and write in the margin and dog ear the corners, you'll have to buy one, but you can do that there too. But it's mycoreintentions.com/exit plan. And if you want to DM me, I'm at mike@mycoreintentions.com.
Awesome. Mike, it was a pleasure having you on. I really appreciate it. Learned a lot and gave a lot of insight and knowledge to our audience. I really appreciate you taking the time and look forward to connecting with you again soon.
Thanks, Dwaine. I appreciate it.
All right. Take care, my friend.
Bye-bye.
Bye.